Hey, I'm Ann-Riley Caldwell, not your ordinary agent. I'm a realtor here in the Middle Tennessee market, and I'm here with
Matt.Wilson with the Wilson Mortgage Team. I am a lender here also in the Middle Tennessee market.
When it comes to HOAs, what are some things that people should know when it comes to financing and costs with those?
So your HOA is going to be included in the debt to income ratio. So keep in mind that, maybe the HOA does have the smoothie bar, the tennis court, the swimming pool, trash pickup, and great lawn guy. But if the HOA also costs you $400 a month, that's $400 less that you can have in purchase power monthly, which equates to about $80,000 less in purchase power on your actual price.
Yeah, and I should mention HOA stands for Homeowner Association. So some houses are going to have an HOA. A lot of houses are not going to have an HOA. So that's one of the reasons you should talk to me about areas that you're thinking about living in and even subdivisions within those areas, because that is one of the factors that we have to take into account in making sure that when Matt says you can probably go buy a $400,000 house, can you really buy a $400,000 house if there's a massive HOA fee? It's probably going to reduce your purchase price to some degree if that's not what he factored in when he originally talked to you. Also with HOAs, I think there are some transfer fees and some other things that come into play.
Yes, a lot of the times we'll see up to about $1,000 in HOA transfer fees whenever someone purchases a home that's inside an HOA. And that's also expense that has to be documented and has to be accounted for on your funds to close.
Yeah, so there's nothing anti-HOA, but it's just something that you need to know. So one of the other things that's important to know is what are funds to close?
So funds to close are the final number that you have to bring to the closing table, hence the term funds to close. Basically, they are comprised of your down payment and whatever closing costs are owed, and they will subtract earnest money or any number that's already been paid up front, such as an appraisal fee or any sorts of extra inspections from the funds to close amount.
And what is earnest money?
Earnest money is what I like to call I'm serious money. So basically, earnest money is money that gets put down whenever you write a contract on a house and it gets accepted. That way the seller knows that they have that amount of money in security in the event that you decide, well, I just don't want this house for no reason at all. So, Ann-Riley, can people ever get earnest money back in a real estate transaction?
Sometimes, yes. So it depends on what you wrote into your contract. So it's one of the things that we talk about when we get ready to make an offer. But if you are going to do like home inspections or have appraisals, if those things do not meet certain expectations and they're done within certain time frames, then yes, if you walk away for a legitimate reason, you most of the time can get your earnest money back. If you just wake up one day and go, I just decided I don't like this house after all, could have some issues. In that case, you won't get your earnest money back if there's not a contractual reason to get out of the contract. So Matt, tell us a little bit about what the minimum job history looks like for somebody to be able to qualify for a loan.
So typically, what a lender's looking for is a 2-year job history. Now, that doesn't have to be 2 years at the same job. It just needs to make sense. So if you've got someone that was working at McDonald's through college, graduates college, and then gets a job as an engineer and they got an engineering degree, good to go. If you've got someone that was working at one trucking company and then gets offered higher pay at the next trucking company, good to go. If you've got someone that just graduated school and didn't work in school, you can actually use the school as job history as long as they get a job in the career field that they were training for.